There you have it. The markets are officially closed on this Wednesday, July 16th. Welcome, investors and traders. I'm AJ Monte, and with me, I have Nod from NODLive. Some of you know who Nod is, especially if you're a member. Nod basically is the glue that keeps this whole thing running during the course of the week, and he also provides our members, especially to the members for NODLive, with the relevant news and information that hits the tape. And a lot of folks are relying on those news releases to be able to offset some of the risk in the market. By the way, if you're interested in subscribing for a free membership, trial membership for NODLive, go hit that scan code. You'll see that scan code pop up on the top right-hand side of the screen there. So, Nod, what do you have for us today? A lot going on already, and it's only Wednesday.
It never stops, AJ, man. Good Wednesday afternoon. It's our midweek report again. It's live. It's our third one. And after, Monday was kind of a waste of a shirt day. But yesterday, Tuesday, saw some big events and big financial earnings with Bank of New York, BlackRock, Citigroup, JP Morgan, et cetera, et cetera. And outside of State Street, all of those guys really crushed their earnings. Now, today, we had industrial production, and that surged in June, setting a new record while May was revised higher. But AJ, yesterday, we got inflationary data in the CPI. Which is the consumer price index, which saw a rise of a 0.3% rise month over month, which was what was expected. But again, inflation is going up. And as you can see from this tab, AJ, energy, insurance, and housing are leading the way. Now, the big bugaboo for everybody is housing. And the NAR, which is the National Association of Realtors, they said that Americans now need a six-figure income to afford the average price of a new home, which is $422,000. So check this out. So AJ, with this in mind, and with everything, with the cost of everything going up, and with people needing more and more money to purchase their first home, it brings me to the dollar. We talked about the dollar, in the past, and what I want to talk to you about is, if you can just look at this tab, AJ, the dollar, it had 9 consecutive green candles yesterday after a very big beating. What are your thoughts on the dollar now, and what do you see moving forward?
Well, interestingly enough, we saw a nice little bounce in the dollar today. Now, for those that are tracking the dollar on Thinkorswim, it's $DXY. And we had that nice bounce right off of this channel line, which I talked about a couple of weeks ago. Let me back out so I could show you the channel line that I'm talking about. This is the 10-year weekly chart. Even if I go back a little bit further and look at the monthly, you could see the very well-defined channel that the dollar has been in. Now, if the dollar breaks out below that trend line, you have to watch out. Technically, that's a big failure, because the way you trade channels and the way you look at channels is, if the channel or the trend line is broken, you then take the width of the channel and you attach it to the breakout point. And so the dollar could wind up way down here if it doesn't hold that support level. And if you look at the daily chart, again, going back to the daily candle chart, you can see that today we have a bearish candle known as a bearish harami. Now, if you've been following along long enough with StickyTrades and through our technical analysis teachings here, you'll know that bearish engulfing and bearish haramis are obviously very bearish. There's a bearish harami. There's a bearish engulfing. There's another bearish engulfing. Here's a bearish harami. And what's happened on every single one of those bearish candles? It dropped. Now, I'm not saying as a guarantee the dollar will drop, but there is a good chance it could drop from here. Now, again, for those who are trading the dollar and some of the other fiat currencies, even in the futures markets or even in the bond market, you could trade against that as well. You see the 20-period moving average here is most likely going to act as support. Back here it was resistance. We have that role reversal taking place where resistance, once broken, then turns to support. So we'll have to see if the dollar holds. I mean, I'm not an economist. I'm certainly not part of the Fed crowd, but I can look at a technical chart, and the dollar, as well as other currencies, have a tendency to move according to the technical signals, and they follow those signals very well. So keep an eye on the charts for sure.
So, AJ, speaking of technical signals and volatility, this is our third live weekly midweek report, and people have always asked us. They said, can AJ do a quick recap of the diamonds, S&P, and Qs? So, would you mind just doing a quick recap of the majors for everybody, and before I can dive back into my word salad?
Yeah, I normally reserve that for Fridays, only because we have so much content to cover in a half hour.
Right.
What I've been doing, I've been letting everyone know that my long-term outlook for the markets are still extremely bearish. But last Friday, I did put some downside targets for the shorter-term traders, particularly the option traders. And you can see here that we did hit the downside target on the diamonds. And in the process of doing that, it formed a hammer candle, which is that long shadow, and a bullish harami. So we could see a little bit of a bounce here. I'm not going to say that we're going to go all the way up to the highs here from the 3rd of July, but we could see a little bit of a bounce, which could bring us into an ABCD pattern that if it pivots lower, let me draw that out for you. Here would be an A here, and we would have to wait for the pivot to form a B here. But if we get a pivot up and then it pivots down from a C, then watch out below. The 20-period moving average is most likely going to break and will go to a lower D. Now, if you look at IWM, some people trade it, some people could care less about it. Here's another one. We hit the downside target. You're going to see the same pattern throughout all of the major market ETFs. With IWM, we are starting to get into oversold territory. For those that are following the CCI or the Commodity Channel Index, once we drop below the zero line, you generally get 2 to 4 more days of downside momentum. But we got the oversold condition down below the green, which we're not quite there yet. So it's going to be an interesting couple of weeks, especially as we get closer to the end of June, because a lot of us are keeping an eye on August 1st. And maybe, Nod, you could chime in on this. What do you think is going to happen with regard to that being the big tariff day? It seems like the news has been moving the market, not the other way around. But what do you think could happen, or what do you think we could see happen on August 1st when the big T-Day hits us?
AJ, I think we've seen a lot of people trade in advance of these big events, whether it be a debt ceiling or whether it be an appointment of somebody. I think traders are very anxious to trade ahead of the event, and we've also become accustomed to things getting kicked down the road. So I do think the institutional and the retail trader are a bit smarter than the market. I think they know what they know, and things aren't going to scribble too far outside the line. That said, we are a headline-driven market, and thankfully for the technicals, it keeps us sane. But I do think volatility is going to remain, especially with us heading into earnings season with everything that else is going on.
Yeah, speaking of volatility, look what happened here today. We had a big spike earlier in the day, and we came within pennies of us filling this gap. Now, this is the only time in history that I've found where we still have 3 open gaps on the VIX to the upside. Now, I continue to tell everyone that there's 100% guarantee that those gaps will fill, because the VIX is an oscillating index. It's not a stock. So eventually those gaps to the upside will fill. However, if you're looking to trade the VIX, you have to also understand that once the gap fills, you generally get pullbacks from those points before it goes higher. So if we get the first gap filling way down here, as you can see from that little circle that I just drew, then you've got another gap above the market up here, and then you've got another gap even further up here. And so at each level, you're going to see pullbacks from the gap fill points. So if you're trading the VIX, or if you're trading options on the VIX, you got to keep that in mind. So yeah,
just be careful.
Yeah, and the other thing we're looking forward to for those who are short selling is you want to see the VIX close over the 20-period moving average, which is that blue line there. It traded above that today, and it traded above that on Monday, but it did not close over that moving average. So once you get the close over the moving average, then you're going to see things get really interesting, because the moving average is going to act as support for the VIX. Let me just hop real quick, just show SPY and the Qs. SPY has the same type of a hammer candle. didn't quite hit the downside target, but the oscillators are still going down. So you got mixed signals there. If anyone's long, you have to make sure that you're protecting yourself below the moving average with sell stops, or if you're trading options, you got to keep an eye on the charts before you add any positive delta. And the Qs, interestingly enough, topped out yesterday. And then if you look more closely, we do have a full-fledged pivot here. A pivot, again, is defined by a lower high followed by a lower low. So there's your pivot. And the pivot is taking place on a higher volume day as the Qs are generating a sell signal down here. So it's not exactly in lockstep with the industrials or even IWM, but it makes it very interesting because right now this is a trader's market. It could be very frustrating being an investor, keeping an eye on the news and watching the market, having these knee-jerk reactions to the news. But for option traders, this is where it all happens, and we're having a tremendous expiration week. By the way, expiration Friday for the monthlies are this Friday.
Yeah, you've already sent some publications to take in some massive credit, so it's been really great. So AJ, we've covered the majors. Big earnings kick off the dollar, but the other big elephant in the room is cryptocurrencies, mainly Bitcoin. And I don't pretend to be an expert or worshiper in the space of Bitcoin, but I did launch a cryptocurrency fund way back when Bitcoin was below 10,000. So I do feel I have a better grasp on it. But I've been saying now for 7 years that adoption and regulation will help give Bitcoin more relevance and acceptance for me. So check this out. We've seen in the last 3 months, we've seen 70 times more Bitcoin inflows than outflows. So to me, I'll show this again. So to me, AJ, go ahead. I was just saying, to me, it's more important to pay attention to the charts and talk about those because with regards to Bitcoin, it's very easy to get lost in a lot of the noise. Where are you with the technicals on Bitcoin, AJ?
Well, one of the key words is that you mentioned is the regulatory side of Bitcoin. Now that will go completely against the grain of those who are in Bitcoin because they're in it for a reason. It's unregulated and it's decentralized. Once the government gets a hold on the cryptocurrency market, then they're going to find ways to tax you. They're going to find ways to trace every single little trade. I'm not a big fan of the government getting involved in this space, but it seems to me that's going to be inevitable. What we're seeing in Congress, especially with this revote, the GOP celebrated a win now that so-called the arm twisting is over from Donald Trump, trying to get those folks to go along with his side on that. But again, I'm totally against it. But I will say this: if they find a way to get in and link to cryptocurrency or the digital dollar, whatever you want to call it, they start linking that to gold, then you're going to have something that's really interesting. If you look at this chart that I have here of Bitcoin, I had an article that we put out on Monday talking about Bitcoin, silver, and gold and the risks involved with each one of those. I think Bitcoin is most likely going to pull back to at least the roll reversal. Let me draw that out for you. Here's a resistance. I'll put an R here with an arrow. Here's the resistance point right here. And if I draw that straight across, that's the roll reversal support that I'm expecting Bitcoin to pull back to. So at this point, you're talking close to 7% pullback before it hits that support level. Whereas when you look at silver, although I think silver could pull back a little bit, the pullback to the roll reversal on silver is not going to be as big of a deal with regard to the risk. But I do think you're going to see a pullback in Bitcoin in the near future when all the craze and hype over what's happening in Washington subsides a bit. I think you got Bitcoin with a gap down here. So there's an 80% chance it's going to fill that gap. That gap, by the way, is going to be at $110,880. I'm sorry, that's the low. The high is 114,380 is where that gap will be filled. And so I do think the gap could fill. Maybe it'll bounce and then form an ABCD pattern before it hits that moving average. Now, going to silver, and we'll put the link, by the way, to that article in the description box after we post.
Yeah, it's in there. We're good to go. They've got it
in there
now.
already. All right, good,
Yep.
good. All right, so silver has a gap as well. I think this one could pull back to the moving average. Again, like I mentioned last week, I was hoping for a pullback somewhere in this area so I could buy more, but I'll let you in on a little something. I did sell 15% of my SLV position, and I guess I could show this. I told some of the members about this, but then I took that money and I'm in and out of Soundhound. This one is, I got to tell you, this one's following the technical signals like a charm. And I'm having a great time because I don't even have to put up all the money that was generated when I sold 15% of my silver position. I could put up partial amount and still get a big return on the swing trade on this one. Now, here's one, again, that trades very nicely with the technical signals. This green dotted line here represents the roll reversal. Here was the resistance that broke out here. And then look at that hammer candle right at that new support level. So for Soundhound, I would be very happy with taking a profit up here around $13, at which time that's going to be another new resistance area. Here's one of the benefits of being on the live midweek report. We get to talk about these things as they come up because I really, and I'm not kidding you, I have no idea what questions Nod has for me. We don't prepare, we don't rehearse, we just go for it. Yeah. and I want to keep it fresh. And you know, if we have comments in the comment field, I'm trying to keep one eye on that, one eye on my charts. Then we could take some of those from some of the members here. Who's that? Mike looking at what was that? Joby? I think he.
Yeah, AJ. I mean, so Joby was a directional equity publication we put out about 2.5 months ago. I mean, you don't toot your horn very much, but look at that chart. My goodness.
Well, to put things in perspective here, we got out of Joby after a really nice and profitable trade, and it kept going. So it's not like we're superheroes here that now it's trading 16. We're out of this a long time ago. And we had a very profitable trade, as I showed that as one of the trades of the week on the weekly market report a couple of weeks ago. However, looking at Joby going vertical right here, and if you don't know about this company, just Google them and look at some of the YouTube videos. They're a fascinating company when it comes to aviation. You might see some propellers and aviation paraphernalia around my office here. I'm an enthusiast. Let's just put it that way. But this one, if I'm talking to any of the pilots, this is at the stall angle right now. We're way past that angle of attack that we need to be, and we could definitely pull back on this one. And I'll tell you, I'm absolutely not going to short a $16 stock. However, all right, and thanks, Mike, for the suggestion on this. I would consider going further out in time and maybe buying the $13 puts. Again, we got to put that disclaimer on the bottom of the screen. This is not a trade recommendation. It's what I would do once the pivot forms, right? We got to use that for educational purposes. Oh, the lawyers out there. Oh boy. All right. So, but I would consider buying these for around $1.25, because if this stock pulls back just $2, those options that you buy for $1.25 could be trading almost double, or at least $1 over where you buy them. So for an option trader, this is really good stock to keep an eye on. But remember, you got to watch for a pivot. What is a pivot? It's a lower high, lower low, or a bearish harami, bearish engulfing, shooting star. Any of those bearish candles is something that I would react to. And option traders, don't be surprised if this one shows back up on your trade list there on one of my publication videos. So keep an eye on that. Now, one other thing I want to mention for the folks that know nothing about options. If you are planning, at least sometime in the future, of trading an option, you have to start learning now, because the brokers will quiz you before they give you approval. That was your dog, or was that you, Nod? We're a dog family too.
That was me getting excited about options. Sorry.
Oh, no, that's fine. Absolutely fine. Dogs of the Dow, right? Well, anyway, we've got a program where you can learn options, because if you try to open up an option account or try to get a higher level of option clearance, the brokers will get you on the phone and test your knowledge before they give you approval. So you might as well start learning about it now. If at some point in the future your plan is to trade options, it's the way I trade. Very rarely do I take long positions unless it's in a stock like SOUN. I don't trade the options on that. I just trade outright on the equity side. But this is an absolute great market for option traders. Now, what else you have from the NODLive feed? Let's talk a little bit about
the
that.
non-life fee. So if you check out my tab here on global inflation rates here. So AJ, the U.S. is the last reading was we're at 2.7%. So in theory that's a low level, but if you look at it comparatively, we're still rather high. So I was going to bring something up on silver, but like you said, live TV, we jumped around. So I would ask, with this in mind, can you just give a refresh on TLT? Because again, that impacts so much, so many different levels of trading and everything that we're doing.
Well, remember, this one's going to be inversely related to the bonds, right? So, or interest rates. So this one is showing a bullish candle, believe it or not. And what I like best about TLT is that it's tracking the bond market, so it's inversely related to interest rates. So if this one starts to go up, then that means interest rates are about to come down. And I keep talking to Tim Lindsay, who's our mortgage expert, so we could talk a little bit about bonds moving forward, especially the long-term bonds. And we'll get Tim on one of these shows eventually to talk about that. But you got to think about what is going to cause the bond market to go up if Trump is trying to get Powell to lower rates, right? I mean, if they lower rates, the bond market will go up, which would be good for TLT. But what's that going to do to inflation? You got all these moving parts here. So I don't really know what to expect here other than you got to follow the charts. Now, for the short term, I would say it's safe to say that we can get up to that moving average, but I do have a longer term target from our rapid fire session a few weeks ago. Upside target on TLT is $89. When we take a look at the weekly chart on this, you can see that there's really good support down at this level, but we just got to keep an eye on the bond market. If you're going to trade this, I would say use the options and trade spreads to cut down on some of the risk, and I think you could be okay. Yeah.
AJ, a question from one of our live members, from Venkat. He asked, whenever you pull up a chart, what's a preferable time frame that you like to do when you make a forecast? I know that's kind of a how long's a piece of string, but do you have a preferred length of time that you like to look at for a forecast?
Well, let me do this. I'm going to throw up something here that I normally don't, but I'm going to do it right here. Okay, so I'm going to bring up the rapid fire list, and we have a rapid fire session coming up at 6 o'clock tonight. So if you're interested in coming on board, just click on the subscription link here, and you can get your free trial and hop in this room. But last Wednesday on July 9th, our members, you can see first name only, protect privacy. Our members give me ticker symbols, okay? Then in rapid fire succession, I go out and I put price targets on these. When the price targets hit, we hit it, we color it with a green colored cell, and the target is hit. And then we look at the open cells or the white cells as the next ones to hit. Now, if you look at what happened here last week, this is not normal, by the way, but it worked. It's working out very nicely. 43% of the targets from just 5 days ago, 43% have already hit. If I go back in time to the week before last, you could see that 60% of those have hit. So with regard to the time frame, our historic record is that 82.2% of our targets hit within 2 trading months, or you could say 60 trading days, which actually turns out to be closer to 3 months. And so 82% hit over that time. And that's very important for swing traders, because swing traders are usually getting in and out of trades with a duration of anywhere between 3 weeks and 3 months. That's the window for swing traders. Day traders obviously are in and out on the same day, trading by minutes. And the investors are more in long-term, looking to buy and hold for a few years, perhaps. Long-term investing used to be a holder for 20 years. Nowadays, long-term investors are in it for 12 months. if they're lucky before they get out.
12 hours. Yeah, it's crazy.
Yeah, so that's my time frame, 3 weeks to 3 months. And that's what we've been showing to be very accurate for targets hitting at 82.2%.
I appreciate that. So I want to go into a little different channel. So you've been trading for more than 4 decades, and I'd say, especially over the last 5 years, concentration has never been more apparent. And so with the five top market cap names, each being within 2 or 3 major indices, it feels like those names kind of run the market. So if you check out this chart with regards to concentration, this shows that only 62%. Oh, let me start this. Only 62% of equities are currently trading above their 50-day moving average, which is a mixed sentiment at best. And I know you kind of have a cool chart on Thinkorswim, but AJ, when you see something like this where it shows that, yes, there's been some disconnect with the names, the billboard names, the $3 and $4 trillion names, but with nearly half of the names out there trading below their 50-day moving average, what does that tell you from a trading standpoint, and what would you look at for the technicals to kind of illustrate this?
Well, this is not normally defined as it being the breadth of the market, because you're really looking at the stocks that are hitting 52-week highs versus hitting 52-week lows. Here's the ticker symbol for the Thinkorswim folks, especially, that will work very nicely in this example. It's $SPX. That's for the S&P index. So it's $SPX, the letter A, the number 5, OR. So it's $SPX A50R. And what this is doing is it's giving you that percentage where you can see here that 62.82%. I believe that's how you're reading it, Nod.
Yep.
Are now falling below that 50-day moving average, which is a pretty major moving average. And you could see that by looking at this chart, the overall market is weakening in the technicals, especially because you got that hard pivot right here. Now, just like what I talked about in DIA and SPY, you could see a little bit of a bounce. I would not be surprised to see that. However, you're going to see you'll have to make a correction. At 62.82% or above the moving average. There we go. Right. So if it starts to go up, you're going to get closer to 80% here. When that occurs, we generally get big pullbacks. So I like these different composites that they put together. Another thing you want to look at, we have about 2.5 minutes to go over this one, Nod, but I look at the mega cap stocks, the mega cap aggregate, and I have this put together on the Thinkorswim platform where it's showing the top 10 biggest, baddest stocks on Wall Street, as it were, as a fund. And the way you do that on Thinkorswim is you take the top 10 mega caps, you put the ticker symbols in there, and you separate them by a plus sign, and you get this aggregate chart. Yesterday, Look what happened. Yesterday, we had a bearish engulfing, and today, believe it or not, even though the Dow was up, we have a downside pivot. If this aggregate starts closing below that 20-period moving average, watch out below, because a lot of the institutions are most likely selling those mega cap stocks to cut down on some of the risk. And the institutions, as you know, Nod, are still selling while the retail investors are buying into this. They're buying into the game. So, yeah, they're willing to take the risk. I'm certainly not. But, yeah, we can play it both ways for sure.
No, so we've got an earnings barrage in our future. We have some key retail sales, home builder confidence, and about 380 different Fed speakers talking the rest of this week. You know, you've covered volatility, but AJ, does the Russell 2000, is that still a relevant index for you? And does that give you, is that a good leading indicator for you?
No, I would call it a leading indicator, but I do watch it, and I have watched it for almost 2 decades now. That actually was a question that came up in our knowledge base, or one of the questions maybe on the comments field. I can't recall which one, but the reason I track it is because you could trade it, and it's a very good one to trade. It's not expensive as far as the options are concerned to get in and out of these spreads, whether it be calendar spreads, diagonal calendar spreads, or vertical spreads. They work really well, and that's why I continue to look at it, not necessarily as a leading indicator, but as a trading instrument. And Nod, with that, we are coming into the close. Folks, please do us a favor. click that like button and make sure you hit the subscription on the top to subscribe. I think it's in the bottom right corner. If you look right down at the bottom there, there's a red subscribe now button you see on the bottom far left corner. You can click on that, subscribe, and then hit the notification bell. And what will happen is you'll be notified as soon as we're ready to go live again, and you won't miss a beat. So thank you for joining us. Thank you for sticking with us. No pun intended, but maybe a little bit. And thank you, Nod, for giving us your NODLive feed. We're looking forward to the next broadcast. You have a good rest of the day. So long.
Thank you.